So Caterpillar's week earnings kicking off earnings this week. They had a big miss in revenues. The guidance were down. Also, we saw big negatives from NVIDIA, which combined putting a lot of pressure on the markets. The Dow has been off more than 300 points. Investors fretting a lot of things, including global growth. Now, remember, despite this remarkable start to 2019, if the markets start to turn lower from where we are right now, many people believe we can retest those December lows. Here to weigh in, S&P Investment Advisory Services Portfolio Manager Aaron Gibbs, Trend Micro CIO and founder Don Luskin, and Efficient Advisor CIO Larry Shover. Let me start with you, Aaron. Earnings coming into the week, I think so far maybe better than anticipated, not spectacular per se, but we were bracing for a lot worse than this, I think.
Yeah, so far about 70% of the companies have beaten estimates, which is completely in line. But we've got your industrials, your tech, and communications, big names, about 30% of all the S&P 500 reporting this week. So we'll have a much better idea. The communications, like your Amazon, your Facebook, those guys in the middle of the week, that's going to be important. One thing to keep in mind is that 2019 earnings, they have come down since the beginning of January, a little, but this is seasonally totally normal. At the beginning of the year, earnings get revised down.
So this and then happens all the time?
It happens every single year. Earnings come down, then companies beat. So we're not at the concerned level yet. Q4 earnings, they are beating. And we're still seeing relatively normal guidance, so things still look healthy, but we'll know much better by the end of the week.
We certainly will, and it could be a wild ride. Donald, Caterpillar, something of a proxy. NVIDIA, I think, has a lot of one-offs. I mean, this is a stock that already was hammered the last time they posted results. But what are we taking from these numbers so far as we brace for the rest of the week?
Well, with it seems like every earnings season, Caterpillar just gets elevated to the position of being some kind of poster child for whatever it is that's in the air that quarter. Now, of course, it's the China slowdown thing. Now, what's so strange about Caterpillar's numbers is if you break them down on a year-over-year basis, their sales and revenues in China and Asia are up 8%. So their revenues in China are up more than Chinese GDP is up over the last year. Okay, but that's just not good enough for Wall Street. What do they want? Blood? I guess so. So I think everybody just needs to get a grip. This is actually going to be fine.
And to your point, in North America, their sales are up 13%. Construction up 17% in North America. So, if you're using this as a U.S. domestic proxy, you might say it wasn't too bad considering all the doom and gloom, particularly pessimism, Larry, that was coming out of the Federal Reserve a month ago.
Yeah, I mean, consider what was coming out and consider where we started back in November when earnings per share for the S&P 500 went down from $178 to $168. And as Liz mentioned, they have popped back up to about $173. A lot of people looking at the qualitative, and that goes with the Fed as well. To me, this feels like a reset like we had in 2015 and 2016. The same old thing. Dollar stops rising, China is easing with stimulus, and the Fed is pausing. So I don't think we're at the end of cycle. This seems like a reset, and so that's why the qualitative part of these earnings seasons is so important, because earnings per share and all that, it's a moving target, and I can throw out facts and figures that will make us all very bullish, but it's a moving target when profitability is declining. So we need to look at the the qualitative aspects of the earnings season.
Now, Aaron, what this week, a lot of big names are coming out. Is there one or two that matter the most?
One, Apple, just because they had the disappointing revenue numbers, so that everybody's to be focused on that. Amazon as well. GE, just for the health of industrials. So those are sort of my big...
GE still something of a bellwether?
I still feel just for the U.S. industrials, it's certainly important. And then, of course, Facebook, just how communications are going. So I think those will be the big names that will really move the market.
Of course, a couple of those names under a tremendous amount of pressure. Facebook under a lot of political pressure, and, of course, their business is stalled. GE, it felt like a lot of people just loading up on this as the oversold darling, the sort of, hey, this has got to come back, trade of the year. So that's been happening too.
And same with Apple. So I think we've got a lot of names that have really been beaten up, and then we're going to see, well, how do they report? Does the stock bounce, or are people willing to just grasp on any piece of negative news and push the stocks further down? And that's why I'm looking at those guys.
Donald, last time I spoke with you, you said that you were optimistic, but you can see that you believe we'll retest perhaps that December 24th low. Are we in that testing area now? Is this the week that makes or break in terms of us going up further or having to indeed have to go back down and test that low?
Well, one never knows, but I have to say that's exactly what it feels like to me. It feels to me like we had that extreme oversold condition where, forward earnings were off 2%, stocks were down 20%. Right? That's obviously a buying opportunity. Now we've come back into a kind of a normal zone where it could go both ways. I don't think we're going to have to retest those lows. Remember, that was a panic. There are people who feel like idiots for selling on Christmas Eve and the morning after Christmas, and those people are going to be getting back in at higher prices. That's the way markets work.
Larry, how do you see it checking out?
Well, the same as I said a few weeks ago to you, I think that the market's comfortable with assigning like a 15.5 times multiple to the market. And if that's the case, and if we end up with about $173 a share, to me, the S&P 500 at 2,700 makes a lot of sense. On the downside, I think 2,580 to 2,600 is a good floor, a good place to get into a diversified portfolio within the S&P 500.
So that's a pretty narrow range for you. I mean, you're still, the way you're describing it, Larry, sounds like buy these dips from here on out.
Yeah, and I'm not usually like that, and I'm definitely not a technician by any stretch of the imagination. But right now, I think all that matters is the earnings season. And we have, 13 Dow components this week, 20% more of the S&P 500 reporting this week. So I think it really, really matters for that next leg. Are we going to go below the 2,600 level or reach 2,700? My money tends to be on 2,700.
Are you concerned, Aaron? We really got through some key resistance last week, but we didn't break out. But because we've made a series of lower highs every single time, and if we stall here, it will be another lower high. I mean, does that factor into the psychology of the market? If we can't break out right now during this earnings period, does that mean we'd probably give up a lot of ground to the downside?
I think as long as we have the trade wars hovering over us, we're going to have these fears and concerns that, it could potentially go lower. I'm still very positive for the year, but certainly I don't think all the fear has been flushed out of the market just yet. Okay. And so it could be a tough January and February.
All right. Thank you all very much, Aaron, Donald, and Larry. Well, the Dow's down near 300 points right now. Our very own Deirdre Bolton is live on the floor of the... Breaking news, Axios now reporting the Treasury Department is planning to announce as soon as today new economic measures against Venezuela's President Nicolas Maduro. It would be a move to try and use economic and diplomatic pressure to force a regime change in Venezuela to adhere to the voice of the people who just voted there. Now, according to the report, the White House is hoping if depriving Maduro of cash, the military will have no reason to remain loyal to him. Again, the announcement could come as soon as this afternoon. Meanwhile, the market is still under pressure after getting out of the gates a little bit rough here this morning. You had NVIDIA, which had lower guidance, and that's taking a lot of tech names down with it. And, of course, Caterpillar, which had missed on both tops and bottom lines and gave pretty disappointing guidance. Now, we've got hundreds of companies set to report. And the catalysts, there are a lot of potential catalysts that could turn things around. This is going to be a long week, and an hour to go. A lot can change here as well. So let's bring back, first let's bring in Heritage Capital President Paul Schatz and bring back Larry Shover. Paul, the market, though, I got to tell you, I'm impressed, to be quite honest with you, with the session so far. The Dow's off 230 points. It was off a lot more than this, and I think it could have been off even more.
Well, sure, Charles, we came so far so fast from that Christmas low, and it certainly seems like for the past week, that initial thrust rally, those amazing breadth numbers off the bottom, we started to moderate. I think we're in this nice little pause period, perhaps a mild pullback. But look, semiconductors, this is extreme action. Banks are in phenomenal shape price-wise, and even look, high-yield bonds, the credit market came roaring back to life. This is not what you normally see of what I've heard out there. We're in the early stages of a bear market. You wouldn't see this kind of behavior. If things were so bad, you'd see staples and utilities rallying more than everything else. But you've got risk-on assets doing fairly well. Mark came very far. Now, today's action, certainly, if you're a bear, you could have made a lot of noise. We could have had a down 500-600 point day so far, and we're not there yet.
You know, Larry, so far intraday, material names, Martin Marietta, Vulcan Materials look pretty good. The airlines act phenomenal. Alaska Air, American Air, Delta, of course, they had great numbers last week. On the consumer discretionary side, Carnival Cruise Lines, bookings, eBay, which is a name that reports in the next 24 hours, Estee Lauder. So there are pockets of strength out there. What's the message of this market, and how do you think it will close today?
Yeah, that's a great question because you think of Procter & Gamble, Texas Instruments especially, Lam Research. I mean, those are two fragile companies there that with the chip makers, the semi-industry. All that to say, I feel like we're back to the beginning of January 14th, like when Citigroup came out with, you know, they beat the estimates and everybody raised their confidence level, raised estimates for earnings per share for 2019. I think that's what's going on right now. It's very finicky. And believe it or not, we ended up with a really decent week last week. So, yeah, Caterpillar rolled over a little bit. The numbers are definitely not as bad as people think they are. But all that to say, I think people just are trying to get a better handle on guidance and what that, you know, earnings per share number is going to be. Because there's a wide variance between some people at $168 per share to others like me who are closer to $175 a share.
You know, of course, with Caterpillar, it does reinforce one thing, that the U.S. doing better than the rest of the world. So, Paul, where does that put us with respect to this market? Because we've made this huge rebound, and now we're in sort of this area with pretty thick resistance between now and the next major breakout. What's the catalyst that could potentially get us there?
So first, this week, what do you have? You've got an enormous slew of earnings highlighted by Facebook and Apple. Both have been unloved for 6 to 8 months. I wouldn't be surprised if Apple comes in a little better than their lowered guidance. And also, I think Facebook, I think the stock probably, unless they announce yet another crisis, probably could get a bounce after earnings. Look, you got earnings, and the Feds can be out of the way. And frankly, Charles, again, we've had this huge run. It wouldn't be so bad to have a little bit of pause that refreshes, kind of broaden out the pullback, and then let things gather themselves for another push higher, even if it's not until Q2. I think we're going to new highs Q2, probably Q3, but I definitely think this year is going to be a big surprise to the upside for the bulls.
Gentlemen, Paul, Larry, thank you both very much. I've got to break away from you for a moment.